Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. Mullen has been a very exciting and interesting stock to trade recently, with high volatility that provides opportunities for us the traders and many ongoing projects that may fuel the speculations in the months and years to come. At the same time, the company has been having a hard time proving to the market that it is a serious company that deserves to have investors put their money into the company for the long term. So in today's video, we're going to go through the latest fundamentals, the price actions, and my analysis as well as my recommendation to hopefully help you make better decisions. As always, if you appreciate what I do, please consider to drop a like, subscribe to my channel, and check out the links down in the description. So before we start the video, I'd just like to make a quick disclaimer regarding what this video should be about and what it's not. What is presented in this video are my opinions and my interpretations on how things are or should be. They should not be considered as investment advice and should be watched for entertainment purposes only. Help you to make better educated decisions, but you shouldn't use this as the only material to base the process on. Most of my analysis is done in the immediate past or just a few days before the uploading of the videos, and the price action may no longer reflect what you see on the chart by the time this video is uploaded, but it's still relevant as a tool to analyze the impact of the past momentums to the future trends. Also, the analysis will try to cover the stock as comprehensively as possible, so it's going to talk about more factors than just the latest news or the price actions. So sometimes the price might be influenced by the company's financials, the stock market trends, the long-term perspectives, and also who are the shareholders. So this is going to affect how much shares, how many shares are you going to buy, if you're going to buy it, and if you're going to buy it now. Since most of my viewers would be watching my videos for the first time, it is important for them to consider all those factors. So with all that being said, let's begin with today's topic. Mullen operates in the EV manufacturing, distribution, and marketing sector. It acts as a holding for several brands that it has bought along the way, such as Bollinger and the Last Mile Service. The company first began operating around 2014, and this is not the first iteration of Mullen. The previous version of Mullen was called Coda Automotive. There was also a previous venture by the founder of and the CEO of Mullen called Mullen Motorcars. And it was created back in, I think, 2004, and it was able to develop a supercar called Mullen GT, which at the time was one of the world's earliest and only EV supercars. So it's fairly convincing to say that Mullen has been, around the block for some time, and that it has accumulated some experience in working in this sector. But the question is, whether they have the means to stay in the game. And also, if they're actually here to make cars. The sector has been known to be highly capital intensive, and it relies on other industries that might still be in their development phase. There are also the long-term challenges of keeping those companies' valuation high, avoiding the classification of car or industry, industrial manufacturer type of companies. So the reason why I said, I'm not really sure if their role is to make cars, mainly comes from the suspicions of the market participants. Basically, this company has been around for some time, and frankly, it's not always obvious to see whether they're really around to make money or if they're really around to make cars, right? Another source of distrust lies with its CEO himself. He has a track record that suggests that he is in to squeeze the company's value, as well as giving control of the company to the company's ownership to some of his associates. Of course, those are speculative accusations at this point, but I believe that when there's smoke, there is, or at least was, fire. So for additional detail, you can look up Hindenburg Research's opinion on Mullen. It doesn't mean that what he says is necessarily the fact, but it should be used as an additional element to consider in your decision-making process. Over the past few days, Mullen has been through a rough patch in the stock market, with the price sliding down to get back, below the 20 cents level, as the price initially slided down to as low as 19 cents on Monday's trading session, and it hasn't really gotten back to the 20 cents as we speak. Over the past 5 days, the price action was down by almost 30%, which is actually accelerating over time given that the stock went down by 60% over the past 4 weeks. So things are not really looking stellar at the moment. I believe that the main reason why the stock, reacted in such a dramatic move was because of the shelf offering, which may suggest that it's going to keep selling the shares in the upcoming periods. And then fear grappled the retail traders who are the majority shareholders in this case. This was already the case last week with the circumstances that we know, and they haven't really changed, except the fact that the market mood maybe went a little bit further down, and things are not pretty from a global scale, which dampens an already pretty dim investment environment. We have to remember that on paper, a lot of stars are aligned for Mullen to score higher, but it doesn't mean that any of this could necessarily happen for real. This is why going forward, I would recommend to wait for the stock to stabilize before committing additional capital. Regarding the long-term price action trends, despite the recent upward momentums, the company has been having a mostly bearish trend over the past 5 years, having traded between $5 to $10 for many years before peaking around $15 and finally going back to where the stock is currently, meaning in the penny stock level, probably going to get delisted unless there's a reverse stock split, which usually doesn't really help the long-term price stabilization or price increase at all. What this tells us is that Mullen has been hard hit by the ongoing stock market downfall and that its fundamental weaknesses don't help. This assessment recently begun to change a little bit, but in my opinion, it didn't reach a convincing level just yet, to a point that can justify why Mullen is a stock that I would recommend to trade instead of invest in, regarding the recent distribution contracts, the short squeeze, and so on. So the interest around this company is the expectation to get a quick gain in a short period of time. It's not really to get dividends or whatever from the car sales when the cars actually roll out, if they roll out, and if they can get commercialized. With that being said, I also want to add that things can always change rapidly in a relatively young sector like EVs, so the idea of investing in Mullen shouldn't be completely ruled out. So the online community has been skeptical towards the company regarding its capacity to remain relevant and to survive, especially if there is no more natural EV hype to fuel the entire sector with liquidity. The general mood has since transformed into the high speaker of whatever the company announces, with a optimistic twist in the air to say that, oh, if they said that they're going to do that, surely people are going to follow. I'm not sure that if this always translates into the reality, but I think that if you are in this kind of circle, it's probably going to convince yourself that things are still all well. When you see people going all in, with tens or thousands of shares at a time, well, you will think that, well, if all these people are going in, surely I'm not the only crazy one here, right? Well, there are a lot of people who might not have your best interest in mind, because not only that, they may not have their own best interest in mind. So you have to be careful when looking at online opinions and footprint of any company, in fact, but in this case specifically to Mullen. So some have also expressed their worries about the lack of transparency Mullen demonstrated in the past by not saying who they're working with, who they're selling their cars to, and who's making their batteries. Actually, they did mention who's making their batteries, but This company, I think, went bankrupt in recent month. So a lot of those things don't necessarily help the case of Mullen in the eyes of the investors. Recently, they have announced many things regarding like maybe providing vehicles to the army, doing some distribution deals in Europe, this kind of stuff. Now, as far as their online footprint is concerned, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. Now, there are some other factors that serve as like a pretext to buy its shares, but more often than not, the price action has already sent that signal for the market to react positively or negatively, in fact. Actually, I think that sometimes, at least from like what I read, people seem a little bit tone deaf when they see that maybe like the price action doesn't go in favor of Mullen. But when they see that, things are going up, they're going to try to justify it with like whatever Mullen has been doing. So in that sense, I would say that, yeah, it's good for trading. Things are too murky at the moment for investment. So on top of that, the macroeconomic trends within the sector have been under a lot of pressure over the past few months for several reasons, including the increase of the interest rates, the capital flight from growth stocks back to like other corners of the financial system, the conflicts around the world, the supply chain issues, and the expectation that there's going to be a recession in the world economy that has been delayed by like 2 or 3 years of government spending. Sometimes there is no government spending. I just want to say, like, this is why now that, the economy has been awakened in a new reality, plus the fact that a lot of economies around the world have been impoverished due to like the reduced capacity to work. I think that we got to be careful with too much optimism in the air. Now, another factor to look at is, of course, how the flagship company of the sector, Tesla, has been doing. The EV sector is a relatively new sector to work with, and a lot of it is still growing. Very often, people base their decision on whether Tesla is doing well. And the idea behind this is that if Tesla is doing well, it's gonna pull the entire sector up. We have seen on multiple occasions that this is actually the case. Like whenever Tesla is up, NIO, Lucid, Mullen, and plenty of other EV car companies, they're also up. When Tesla is doing down, even if other companies have like great numbers and whatever, it's still gonna go down. So from this, we know that we should expect that Tesla is going to drive the sector, at least for the foreseeable future. And the other thing is, Mullen doesn't always follow the same trends than most companies, like in the economy, but also in the same sector. Sometimes we see that even if the market tanks, it's not tanking. But also it has another twist to it, which is if let's say there is a downward trend, the company might be down by like 90%, even if the overall environment is like down by 10 or 15%. So this is also like another thing that comes along when Mullen doesn't really follow the trend. So with that being said, let's also take a look at the company's numbers, at its financials. The company's cash balance has been decreasing a little bit. For now, it's not a major issue yet because the reserves remain at a decent level. The reason why the cash balance is very relevant to look at is because the cash is used not only to finance operations, but to satisfy long-term obligations as well as the short-term obligations that come to maturity. If Mullen cannot meet those obligations, the company would be insolvent and be liquidated. So to prop up the cash positions, the company would have 3 options. 1, to get positive money flow from the company's own operations. 2, to take on more debt. 3, to dilute the shareholders. So usually, the safest route to go is to dilute the shareholders because that wouldn't give you any sort of obligation. The liabilities of Mullen has been decreased by $13 million, which is a very good thing. However, this news was not really reacted or responded positively in the market. Basically, people are, mostly concentrated on how the stock itself has been doing. And because the stock hasn't been doing too hot, people are more tempted to just sell and to move along with everybody else. And this is why I would say that it's encouraging to see the liability going down, because it decreases like the solvency risks and so on. But we should also be aware that at the same time, Mullen is not necessarily a company that cares that much about its own fundamentals because of like the shareholders' mentality on the most part. The last element to look at would be how profitable Mullen is. And in this sense, it's not. That's actually one of the biggest weaknesses of the company. And it's also one of the main reasons why, in my opinion, Mullen has remained as a stock to be traded, but not to be invested in. Now, the company hasn't generated revenue for more than a year, despite its best effort to control the general operating loss and to maximize the R&D research cost. Eventually, the lack of revenue or the lack of profit, in fine, will dig a hole in its finances, which is going to force Mullen to either take on more debt or to further dilute the shareholders to raise capital, or to make additional efforts to increase the revenue. My opinion is we should expect to see Mullen choosing the second option if possible, because it's the least risky one. It might cause some further tumbling down of the share price, which doesn't help with the company's the current price action of Mullen. Overall, the financials show that the company tries to stay on top of things, but it needs revenue to be able to turn things around. Until then, the only thing that we gotta ask ourselves is, the only two things that we gotta ask ourselves are, one, is Mullen gonna start generating revenue soon? And two, if it cannot, how long till the next round of dilutions? And we have already seen just speculations or proposed future sales of its equity has a tremendous effect on the company's stock value. So we should really keep that in mind while we move forward. Unsurprisingly enough, the shareholders for Mullen are mostly retail, which means that they tend to go in and out very quickly. They tend to react very actively on any sort of news that may or may not influence the stock price. I know that recently BlackRock has increased their holdings in Mullen, but at the same time, this is not significant enough in my book to change the overall approach, which is to trade the stock and not necessarily to hold the stock for the long term. There is still too much uncertainty around for me to jump to the next level. Of course, personally, I would say that the major catalyst for Mullen at the moment is the size of the short positions. The reason why it's relevant is because the short positions will tell us about which significant portions and what kind of strats of the market think about Mullen and why, and whether there will be potentials for a squeeze. Currently, there's about 43 million shares being shorted. The vast majority of them are traded outside of public exchanges, so by institutional traders. The potential for a short squeeze is significant. The short squeeze is a phenomenon observed when people decide to pile in and to buy up the share price, forcing those shorts to be redeemed, which acts as a second wave of purchases, which is going to kick the price to even higher grounds. With that being said, it's very important to control our exposure, regardless of how interesting each stories might be. So, regarding my recommendation, I would say that it's better to wait for a few days to see if it can get back to 30 cents level. If it can, we gotta wait for maybe another 3 to 5 days to see whether this dynamic can hold up. If it can, then this might be the ground for additional purchases. If not, I would say that it's better to stay on the side and to wait for a better timing. I would recommend a maximum exposure between 0.5 and 1% of your portfolio.